Okay, CVS. CVS is getting together with Aetna. That's been well publicized. It's not in the numbers yet, but it's a foregone conclusion. It's happening. CVS has gotten beaten up pretty badly in the last couple of years. And there's some good reasons for it and some not so good reasons. So I personally think you should invest here. Stock's been, like I said, beaten up, so looks like an opportunity. And it's interesting that they put CVS together with Aetna. I don't think we've ever had a drugstore and drug distribution with a healthcare benefits kind of provider. So we'll see how that works out. It does make some sense. Vertical integration. We'll see. We'll see. Okay, so let's take a look at the actual financials here. Or the model, let's call it. We'll zoom in a little bit for you. And okay, so good history of returns. So this is just CVS on its own. We can't do Aetna. It's a financial, so we don't do financials. And you see, great returns. Stock has done well for many, many years. And then really in the last 2-3 years, stock has not been good. And returns have come down, but really it was more about pressure on the supply chain in drugs. There's just widely felt that there was just too much fat in the supply chain, and the drug makers are making too much money. The wholesalers are making too much money. The pharmacies are making too much money. So that's kind of been the theory. And then you see this big spike in the capital. Well, that's actually the company raising money in preparation to buy Aetna. So that will soon, instead of being cash, which it is now, it'll turn into Aetna. Okay, so it's going to get complicated with Aetna in here, but without it in there, we're just saying, the new capital's in place, and they earn about an 18% return, and actually stock is worth a lot more. Now, this stock used to be about 110, so this $184 value is not that crazy, and it's only trading at 68. So, look, I don't think it's going to 184. I think that's unrealistic. I think Aetna is going to complicate it, but it might actually be better with it. And this just tells me there's room for error. Okay, you also get a 2.9% dividend yield. Let's check the dividend chart. And pretty good looking dividend chart. Cash flows increasing, dividends only paying out at 22.9% of the cash flow, and increasing dividend most years. So, that's a pretty good value right there. Okay, CVS, quite like CVS. I think you do well to buy it here. It's been beaten up for a bit, so I think stepping in here is probably a pretty good idea.